opening range breakout, or ORB trading strategy, is one of the most popular trading strategies for stocks and futures. This strategy has been used for decades and is one of the most tested and proven strategies that there is. The strategy is very simple. All you have to do is mark out the highs and lows of the first 15-minute candle during market open and wait for a breakout of either side of that 15-minute candle. Now, that's the popular way to trade ORB, or the opening range breakout. Now, my good friend Joe is a full-time Nasdaq trader at only 19 years old. The way he trades ORB is a little bit different, and in my opinion, a lot more accurate. So instead of marking out the highs and lows of the first 15-minute candle, what he does is mark out the highs and lows of the first 5-minute candle, and instead of trading the first initial breakout, he waits for a retest of that opening range and then enters the trade. We have coded this entire 5-minute ORB strategy into an indicator, so all of the levels are automatically plotted on your screen. You literally don't have to do anything except wait for a breakout and retest of either side, and then look for your entry confirmations. All right, let's jump into the chart here. So on my screen, I have Nasdaq on the 1-minute time frame, and I have the easy ORB indicator pulled up. Now, if you're watching this video right now, this indicator is 100% free. To get access, click the first link in the description below. Not only are you going to get access to this indicator for yourself, but you can also join our free futures community, where each morning at 9:30 a.m. Eastern, we hop on live with our pro analyst Joe, and you guys can follow his signals in real time for free every single day. It's not going to be free forever, so if you're watching this now, make sure to take advantage of this opportunity. All right, so let's jump into the indicator. So I can see on my screen here, if I load the indicator in, I have a bunch of lines on my chart. Okay, so what do all of these lines mean, and why are they actually there? Before you trade any sort of strategy or system, it's important to understand why you're actually trading it and why it works. So if we jump into the settings here, I can see we have the opening range, right? That's the 5-minute opening range with the labels, and obviously we have the abbreviation. Below that, we have the previous day high and low in these yellow lines here. So if I zoom out, I can see we have the previous day low, and there it is, the previous day high in those yellow lines. Below that, we have the pre-market high and low in these green lines, and below that, we have the 50 EMA, just as some more added confluence. If you want to change up the colors of these lines, you can. If you want to extend the lines, you can. You can customize these however you want. However, I recommend keeping this indicator default. So as soon as you load this indicator in, this is all you're going to need. You don't have to change anything. We've literally made it as simple as possible to know nothing about futures trading and have a profitable system within literally seconds of loading this indicator in. Okay, so let's start with the opening range high and the opening range low. So if we go to the 5-minute time frame, you'll see that all this is the first 5-minute candle of market open there. We've marked out the highs and the lows. The first few minutes of the market open, or the first 5-minute range, is usually pretty volatile and pretty chop. Market is still trying to decide where it wants to go for that day, so you normally don't want to be trading within the first 5 minutes. Instead, what you want to do is look for a breakout of the opening range high and a retest to long, or a breakdown of the opening range low and a retest to short. Okay, so let's say we have the first 5-minute candle. Okay, it looks something like this with the high there, and let's say we have the low here. Okay, again, pretend that this is a 5-minute candle. Let's say we have the 5-minute high here and we have the 5-minute low right here. So all we're waiting for is a breakout with displacement of the opening range high, and look for a retest for a long, taking a long on the first bullish candle on the 1-minute time frame to enter the trade. Or we'd be looking for a breakdown of the opening range low with displacement and look for a retest to go short. And again, we'd be waiting for that first bearish candle to enter the short position. Now, it's important to understand what displacement actually is. So a lot of people, when they trade breakout and retest, they'll trade an instant retest, meaning price will close above that opening range high and retest it immediately. Now, the problem with trading an immediate retest, and this is something that I will avoid in crypto as well, is because there is a high likelihood that if you're taking the first instant retest, this could end up being a sweep, meaning this won't actually play out as an instant retest. Okay, instead it will be a sweep, do something like this, and then head back down towards the opening range low, in which case you would have got stopped out almost immediately and lose all your money. That's no fun. So what we want to see is a displacement for the breakout. Now, displacement just refers to the space between the breakout candle and that local high. So I can see here, right, pretending that this is real-time price action, between this initial breakout candle and the local high right here, there is a lot of space here in the middle, again, between that breakout candle and that high. This confirms to us that this is a legit breakout and a legit retest, and that we can look for longs on a bullish reaction, as opposed to this instant retest where we break out a little bit. This is not a breakout, because for all we know, this could just fail this level. But once we see that displacement move to the upside, large bullish candles, right, continuing the trend, right, by continuing the uptrend, and then we get that retest, hopefully into some other form of confluence as well, maybe the golden pocket fib overlapping that opening range high. Now you might be thinking that's way too simple, there's no way this actually works. That's it for the strategy, guys. Now keep in mind we have other levels like the previous day high and low, the pre-market high and low. These are other levels that we can look to take trades off of on the 1 minute time frame. Just going over today's price action, we can see that there were actually a lot of trades that we could have taken. Okay, this is the first 5 minute candle. We get a breakdown to start. Again, we're not looking for a short position. We need to see a displacement move down for a short retest. Instead, this is a sweep of this low. So during this whole move where price is within that first 5 minute range, we don't want to take any trades. We don't want to take any trades. We want to wait for that breakout and that retest. Okay, so here we can see we have that breakout of that 5 minute ORB. And here is the retest right here, waiting for that first bullish candle. Stop loss at this low, scaling 50% at a 1-to-1. And you'd scale the rest at this high right here, which unfortunately we did not hit. That's just an example of a trade that you would take with the opening range breakout and retest. Keep in mind, you're not going to get a trade every single day. So a lot of people joined our live this morning and they're asking, why didn't you take this trade? Why didn't you take this long position? Why didn't you short up here? Because we have a tested and proven strategy and we're waiting for multiple things to line up on the chart before we take the trade. You're not going to be taking trades every single day using this method. What's good about this method is that when you do take a trade, it is a high probability, high confidence trade, and it's a very systematic mechanical approach. You're simply waiting for a breakout or a retest of the opening range highs and lows or of the previous day highs and lows. Now, the way that we trade the strategy in the group is we only trade from market open to around 11. Okay, so all the trades that we're going to take would be in this time frame. If we do not see a trade within the first hour and a half of market open, we're done for the day. Now, the reason I personally like this indicator and like this strategy a lot is because I trade a very similar way in cryptocurrency. Now, I don't use the opening range breakout and retest, but I do trade breakout and retests of key levels. The only difference is that this is a lower time frame, more fast-paced market. You're going to average around 2 to 3 trades per week. Again, you're not going to be taking a trade every single day using this method, but these are high probability, high confidence trades. Every key level is on your chart for you, and you can see how well price reacts to these levels, right? Tests the pre-market high, breaks below with displacement, tests this as resistance, price goes down, breakout of the previous day low with displacement, come down to retest, wait for that first bullish candle. We had the 50 EMA here as confluence as well. That's why we have the EMA, just for an added piece of confluence. This algorithm specifically and the resources that we have is all that you need to become a profitable Nasdaq trader. Like I said, along with the indicator, we have free resources, meaning free PDFs going over the strategy in depth, going over live examples of the A+ setups, and you can trade live with us each morning at 9:30 a.m. Eastern to 11 a.m. Eastern. Now, this is just a very general overview of this indicator and of this strategy. We do go more in depth during the live stream, so I urge you guys to join those. But that's it for this video. If you guys have enjoyed, make sure to leave a like on the video, comment down below if you found any value, subscribe to the channel for more trading content, and I'll see you